Digital Services Tax. The Finance Act 2019 amended the Income Tax Act to include taxation of income accruing from the digital marketplace. A digital marketplace has been defined as a platform that enables the direct interaction between buyers and sellers of goods and services through electronic means. So effective 1st January 2021, the Finance Act introduced a 1.5% tax on income from services accrued or derived in Kenya through the digital marketplace. The tax is on the gross revenue. The National Treasury issued Digital Service Tax or DST regulations in December of 2020, which appear to extend the application of digital service tax to include 1. Downloadable digital content such as mobile applications. So if you're selling apps, that revenue is considered as a digital item and is subject to digital service tax. 2. Over-the-top services including streaming television shows, music or podcasts. So if you earn any income through streaming of such content, then you charge. Number 3, sale or licensing of or any form of monetizing data collected about Kenyan users. So companies that deal with data, sale of data, they do surveys and they sell that data for marketing purposes. Provision of a digital marketplace. So if you're an influencer and you collect revenues so that you can advertise for people, that is also another revenue that is subject to DST. Our subscription-based media, including news, that is number 5. Number 6 is electronic data management, including websites, hosting, and cloud storage services. Number 7, electronic booking or ticketing services. Number 8, provision of search engine services. Number 9, online distance training or e-learning. And number 10, any other service provided through a digital marketplace. So, since this is the future of e-commerce, any person on the digital space, you have now to be wary of your incomes so that you can be able to file and make a return on the DST. Residents and non-residents with a permanent establishment will be entitled to offset the digital tax paid against the income tax payable for the year of income. So if you are a permanent resident of Kenya and you have incomes that come from this digital space, then what this statement is saying is that tax is not final. In other words, you can now compute your business expenses and reduce your taxable amount because it will be the gross revenue minus all the business expenses, and then you tax on the difference. The other form of employees pay the majority of their taxes through withholding from their salaries and parks under the pay as you earn system. So pay as you earn or pay is not a tax, but a way of remitting taxes where the employer holds it before giving you the balance. Any additional tax liability is calculated based on self-assessment. That is where the side hustles come in, or any other business that you have, rental, online, etc., where now you do what we call self-assessment and must be paid by the 30th of the year in which the liability arises. Individuals with a tax burden of more than 40,000 shillings per year must pay in 4 installments by the 20th of April, 20th of June, 20th of September, and 20th of December, unless the total taxable income has been submitted to tax at source. On each due date, the installment tax is equal to 25% of the lowest of 110% of the tax assessed the previous year, or the taxpayer's estimate of the current year's tax liability. However, every person who submits the income tax has what we call the personal relief. The personal relief, which is applicable between January to March of 2020 was 1,408 per month. However, starting in April 2020, the personal allowance or the personal relief is 2,400 shillings per month, which is about 28,800 per annum. So meaning when you calculate all your taxes, you're allowed to deduct an additional 28,800 per year, or 2,400 for each month. The other kind of taxes that are there, one, we have the minimum tax. The minimum tax is intended for taxpayers who are carrying out business and thus earning revenue, but their tax payable is lower than 1% of their gross turnover. The minimum tax will be a final tax and is payable in installments that are due on the same dates as the current installment tax obligations. That is on the 20th of the 4th, 6th, 9th, and 12th month of a company's financial year. By final tax, it means it is not taxed again as part of your other incomes. When we say a tax is final and another one is not final, it means when a tax is deducted at source, for instance, a consultancy tax or withholding tax of 5%, it means that the person who receives the income, that is the consultancy income, must declare again together with these other incomes and compute using the normal graduated scale and deduct the 5% that was deducted at source. But when the tax is final, that means it is not to be calculated with the taxes again. However, the minimum tax was opposed by the High Court and it is suspended until further notice. Then there is the turnover tax. The rate of turnover tax has been lowered from 3% to 1%, and this is applicable to micro, small, and medium enterprises. So micro, small, and medium enterprises earning below 1 million Kenya shillings are exempt from turnover tax to cushion them against the negative impact of COVID-19 pandemic. However, these medium and small enterprises are exempt from turnover tax, will still be required to declare and file their corporate tax returns. The upper threshold is in respect of the turnover tax has increased from 5 million to 50 million. So any small and medium enterprise earning from 50 million and below is required now to calculate the turnover tax at the rate of 1%. The other form of income is rental income, residential rental income tax. This tax is payable by any resident person who accrues or derives income from the use of or occupation of residential property in Kenya. From 1st January 2016, a simplified tax on residential rental income for landlords was introduced. The Finance Act increased the threshold for the annual gross rental income from 10 million or less to 15 million or less. The landlords falling under this category are required to pay residential rental income tax at a flat rate of 10% on the gross rental income, such that no tax deductible expenses are allowed. Eligible persons are required to file monthly tax returns via iTax and pay the tax due on or before the 20th day of the following month. In the context of this tax, a month means a calendar month.